quickly tell you that Asian shares were left in limbo today while the US dollar made all the run-in as recession clouds gathered over Europe and highlighted the relative outperformance of the US economy. MSCI's broadest index of Asia-Pacific shares outside Japan is 0.3%, to be down by 1.1% on the week. Now, Chinese blue chips were flat, while South Korea lost 0.5%. Japan's Nikkei fared better, with 0.3% gain due in part to a renewed slide. Now, S&P 500 futures eased by 0.1% and were little changed on the week, having repeatedly failed to clear the 200-day moving average, while Nasdaq futures slipped 0.2%. Now, Euro stocks 50 futures dipped by 0.1%, while FTSE futures edged up 0.2%. In China, the country is widely expected to lower its benchmark lending rate on Monday, 22nd August this year, with a vast majority of participants predicting a deeper cut to the mortgage reference to lift the ailing property sector and the overall economy. The notable dovish tilt in PBOC's monetary policy stance came after a slew of key gauges, including credit lending data and activity indicators, showed the economy unexpectedly slowed in July. According to reports, the loan prime rate, which banks normally charge their best clients, is set by 18 designated commercial banks who submit proposed rates to the People's Bank of China. Meanwhile, the market consensus of the LPR cuts this month comes as the bank earlier this week unexpectedly lowered two key interest rates for the second time this year to try to revive credit demand in the COVID-19 hit economy. Still in Asia, Taiwan's export orders likely grew for a third consecutive month in July, but at least less than half of the pace of the previous month as global demand cools. That's according to the latest foreign trade reports from Taiwan's Statistics Office. According to the reports, the island's export orders, a bellwether of global technology demand, unexpectedly fell for the first time in 2 years in April as orders shrunk 5.5% from a year earlier to $51.9 billion, taking a larger than expected hit from the COVID-19 lockdowns in China and broader global supply chain disruptions. The report also shows that the trade exports returned to the growth in May and June as orders went up 9.5% from a year earlier to $58.83 billion. The government has predicted July orders to be between 0.4% and 3.1% higher than the year before. Meanwhile, oil prices on the international market slipped today after two gains as market participants weighed worries about a global economic slowdown which would dampen fuel demand against expectations of tighter supplies towards the year-end. The U.S. West Texas recorded a price dip of 0.77% to hit $89.80 per barrel. The Brent crude now sells at $95.91 dollars per barrel, registering a downward price margin of 0.70%. Now, Bonnie Light's trading value is still static at $118.10 per barrel, recording a price drop of 3.25%. For the OPEC basket, crude oil dealers offer $95.73 per barrel with a price decline of 1.75%.